All right. I'm Jay Rod, and welcome to Stocks That Rock. Each week, I turn up the volume on a breakout stock that will rock your retirement account. So as you probably know by now, we've got a new COVID-19 variant of concern on our hands named Omicron. It's the fourth World Health Organization variant of concern designation behind Alpha, Beta, Gamma, and Delta. And once again, the mainstream media has done a fabulous job of putting out very sensational headlines with very little information behind them. In some cases, even trying to shake you out of your investments. Now make no mistake, COVID is serious business, but what I'm about to share with you, Fox, CNN, the Wall Street Journal, they won't tell you until much later, if they tell you at all. That is, that the so-called risky investments of stocks and cryptos actually hold their value pretty well after big COVID variant news. And in today's video, I'm going to show you why Ethereum is actually the true coronavirus safe haven for your portfolio. So before I get into the charts, let me tell you a little bit about how I ran this analysis. In a nutshell, I pulled the WHO's designation dates for each of the variants of concern, and I analyzed the price action of several key asset classes 30 to 60 days out from each date. Let's break this down just a little bit more. The WHO designates COVID variants of concern very much like the National Weather Service names storms. Not every storm gets a name, but big tropical depressions get logged and followed. Well, the WHO designates several types of variants. Variants of concern, variants of interest, and variants under monitoring. Think of VOCs as named hurricanes, VOIs as tropical depressions that are numbered but not named, and variants under monitoring as thunderstorms that could become tropical depressions or even hurricanes later. For the purposes of this study, I focused on the designation dates of the VOCs, Alpha, Beta, Gamma, Delta, and Omicron. Alpha and Beta were designated on the same day, so we've got 3 designation dates before Omicron. And for the asset classes, I looked at the S&P 500, gold, treasuries, Bitcoin, and Ethereum. And I have to warn you, the data may shock you. As a trader, I'm used to seeing stocks go up when market sentiment goes down, since most investors buy stocks at highs and sell low, often in a panic like COVID has caused. But like Warren Buffett, I'm trained to buy when there's blood in the streets and sell when the danger has passed. So I wasn't surprised at all to see that 60 days out, stocks are up. But I was shocked to see how much Ethereum outperformed pretty much everything else. On average, Ethereum, measured by the Grayscale Ethereum Trust ETF, gained 50% in the 60 days following a new VOC call. And while some of the swings were big for the crypto, ETHE did not close below the 0% level. Oil also did much better than I expected, up an average 24% from designations, which is also surprising given how often Wall Street analysts have said COVID variants will destroy demand for oil. Bitcoin, as measured by the Grayscale Bitcoin Trust ETF, gained 16% on average, but with a maximum decline of 10% from the VOC dates, meaning it's not such a great safe haven. And even though stocks only gained 7.8% on average, the S&P 500 was still up big, and the max decline for stocks was only about 1%. How did the traditional safe havens of gold and treasuries fare? Not great. Gold was down about 1% on average with a max decline of 3%, and long-term treasuries basically sank right out of the gate, dropping 7% 2 months out from VOC designations and closing out that period just above the max decline level of 8%. Now, to be completely fair, I used Bitcoin and Ethereum ETFs to compare them against stocks because, as you know, cryptocurrencies trade 24 hours a day, 7 days a week, and stocks only trade Monday through Friday from 9:30 a.m. to 4 p.m. The actual cryptos themselves did suffer some weakness within the first 2 weeks or so from the designation dates, but Ethereum still outperformed handedly with a 44% average gain and a max decline of just 5%. So let's bring this all back to center. When the WHO designates new COVID variants, the traditional safe havens underperform and the market's riskiest asset classes surge higher. In fact, Ethereum as a crypto is often derided as a joke of an investment by many financial professionals, but it's the top play of the bunch when COVID headlines shake the markets. Since the Omicron variant was christened, Ethereum is up nearly 10%. But if you've been watching my videos, you know I love Ethereum and I've been talking it up for months. In fact, after the coin's big breakout in October, I slapped a $5,900 price target on it, seeing much more room for the crypto to run. And while I took some heat initially on that call, now we've seen the pesky resistance at $3,950 become strong support for the coin on its recent pullback. So, not only do you have a great COVID safe haven in Ethereum, as you learned today, with the momentum of new crypto ETFs hitting the market, you've got an upside to my Ethereum price target of nearly 30% from where it trades now. And you're gonna wanna get into the crypto now before it really takes off. That's all for today, but as always, if you dig the content, please hit the like button and subscribe to the Rich Retirement TV YouTube channel so you never miss out on my videos. And if you've got a question or comment, leave a comment below this video or shoot me an email at askjrod@stpaulresearch.com. I love hearing from you. Thanks again. And for Rich Retirement TV, I'm J-Rod, and I'll see you next time.